on financial stability, human well-being in the environment across the world. We have 4 research clusters, and one of them is called Global Economic Governance. And welcome to our Global Economic Governance seminar series. We had one last month, right before the IMF and World Bank spring meetings, annual meetings, with Nobel Prize winner Joseph Stiglitz. And today we're very honored to have Zhongxia Jin, the Executive Director of the International Monetary Fund for China. Before I introduce Dr. Jin, please let me just tell you about a few other events that we have in the next couple of weeks that might be interesting to you. On Monday, if you go to our webpage, and there'll be a link to it in the chat, we're hosting a major event and launching a big report called Debt Relief for a Green and Inclusive Recovery with the SOAS Institute for Sustainable Finance and the Heinrich Boll Foundation. The GDP Center is releasing a report that calls for a global debt relief effort that's calibrated towards the Sustainable Development Goals and the Paris Climate Agreement. That will be keynoted by the Honorable Mia Mottley, the Prime Minister of Barbados, and the Honorable Gordon Brown, the former Prime Minister of Great Britain. You can also go to our webpage and look under events to find out about our Global China Research Colloquium, where we'll have Yang Wang next week, former World Bank economist, now a non-resident fellow here at the GDP Center. She'll be talking about debt sustainability in Southern African countries. So please go to our webpage and learn about those events. Well, it's now my privilege and honor to introduce to you Dr. Zhongxia Jin. Zhongxia Jin is the Executive Director for China to the International Monetary Fund, where he's been since 2015. Prior to joining the fund, he held various positions at the PBOC in Beijing, including Director General of the Research Institute, Deputy Director of the Monetary Policy Department, and Deputy Director of the International Department. His experience covers G20 matters, IMF affairs, regional monetary cooperation, and domestic open market operations. His research areas include interest rate liberalization and monetary policy transmission, internationalization of the renminbi, and balance of payments management. His numerous publications in recent years, including China and the G20, and the future path of globalization, international trade and investment rules under restructuring. His most recent research is on renminbi from marketization to internationalization. Zhongxia holds a PhD in international finance from the University of Hawaii and an MA in macroeconomic management and a BA in international economics from Beida or Peking University. Dr. Jin will speak today about China and the international monetary system. The way these seminars work is that the speaker will make a presentation, and we ask you all to listen attentively. And if you have questions, if you look at the bottom right-hand corner of your Zoom link, you'll see a little Q&A box. Please, first and foremost, introduce yourself so we can get to know each other in this more not very personal environment in the world of Zoom webinars. And secondly, put a short question in there. After the presentation, I will cluster together 3 or 4 questions at a time and ask them to our speaker, and we can do that for a little while afterwards. So again, please help me in welcoming Dr. Zhongxia Jin, Chinese Executive Director to the International Monetary Fund. Thanks so much for coming.
Thank you, Professor Gallagher. Good morning, everyone. I'm honored to have the opportunity to speak to you and would like to thank the organizers for arranging this event. International monetary system has experienced a long evolution. I can only start from the relatively recent past. From the gold standard in 19th century to the Bretton Woods system after World War II to the IMF-centered system today. The international monetary system has continued to evolve, reflecting the constantly changing global economy. Given the IMF's central role in overseeing and ensuring the smooth functioning of the international monetary system today, it would be appropriate to frame today's discussion mainly in the context of the relationship between China and the IMF over the years. I'm delighted to share my memory and thoughts on this important subject. Let me first recall the period between 1980s to 2000s, during which the IMF participated and supported China's early transition from a centrally planned economy to an open market-oriented economy. In fact, China was a founding member of the IMF that was established on December 27, 1945, and has been formally represented by the People's Republic of China since 1980. The country's quota at the fund has experienced ups and downs over the years, from ranking the third at the time of establishment after the US and the UK to the 12th place in 1980, and then back to the third place in 2015, and now after the US and Japan. Over these years, China has been actively engaged with the IMF, and the intensive interaction and cooperation between the two has yielded very positive results with important implications for China and the international monetary system. In the early 1980s, the IMF approved two lending arrangements to support China's structural reforms for the country's structural adjustment in its transition from a planned economy to a market-based economy. During this phase of engagement, China introduced, through the IMF, internationally accepted standards for macroeconomic statistics compilation, which covered national account, fiscal account, monetary and financial account, and the balance of payment account. That laid the foundation for a modernized macroeconomic monitoring and surveillance framework. As we moved to the 90s, last century, the IMF continued to weigh in on China's transition process. In particular, three key milestones come to my mind. First, the tax sharing reform in 1992 to 1994, which dramatically streamlined the fiscal arrangement between the central and the local government. Second, the unification of China's official and swap market exchange rates in 1994. Third, China's acceptance of the obligations of Article 8 of the IMF Articles of Agreement in 1996, committing to current account convertibility. In each of the above, the IMF made important contributions through its technical assistance and policy analysis and advice. It is also because of these important developments that China was able to sail through the turbulent Asian financial crisis without being significantly hurt. In turn, China's stability contributed more broadly to an early recovery of the regional economy. Turning to this millennium, as China's economy continued to grow and mature, the IMF's focus shifted to potential risks in the rapidly growing financial system, and it engaged in in-depth discussions with the Chinese authorities on the emerging vulnerabilities in the banking system. While these discussions turned into heated debate at some times, they have generated constructive outcomes. For example, the IMF's early warning of potential risks associated with rising non-performing loans in the banking system has contributed to the reform of state-owned commercial banks, as well as the strengthening of the prudential supervisory framework in China. In 1999 to 2000, the Chinese authorities conducted a transfer of NPLs, non-performing loans, from major state-owned commercial banks to asset management corporations for disposal over the course of 10 years. In addition, a series of capital injection into state-owned commercial banks also took place to strengthen their balance sheets. In 2002, the authorities introduced new loan classification method and provisioning requirements that are consistent with international best practices. Strategic investors were also invited, including from abroad. All the major commercial banks in China were eventually publicly listed in stock market before global financial crisis in 2008. And that again helped China to weather the storm of global financial crisis pretty well. In these earlier years, the IMF has played a pivotal role in engaging China's development and transition, and the trust and professionalism that was nourished over these years proved critical in fostering the cooperation needed to weather through the challenges that have followed. Then the next period is 2008 and 2009. China and the IMF member countries worked together to navigate the crisis and build a stronger international monetary system. The global financial crisis in 2008 and the ensuing economic downturn have put the soundness of the international monetary system to serious test. The IMF played a critical role in tackling the crisis through providing financing and analytical support to its members. IMF members also took drastic steps to support their economies and safeguard stability. In China, the authorities have introduced a large-scale 4 trillion renminbi stimulus package, which not only supported its own economy, but also gave the global economy a boost. China also joined other members in pledging support for the IMF's lending capacity, committing to invest up to $50 billion in notes issued by the fund. Furthermore, China took even more active steps in supporting the smooth functioning of the international monetary system. These include engaging in local currency swap arrangements with other emerging market economies, and participating in the regional reserve pooling system under the Chiang Mai Initiative multilateralization. The close cooperation between the IMF and its members, including China, has proved instrumental in supporting the global economy during the global financial crisis and building a stronger international monetary system going forward. As we walk into 2010s, China's cooperation and integration with the international monetary system was further strengthened. In the years that followed the global financial crisis, China's increasing importance in the international monetary system continues to be reflected in the development at the IMF. On November 30, 2015, the IMF Executive Board approved the inclusion of the renminbi, the Chinese currency, into the currency basket of the Special Drawing Right, or SDR. This marked a pivotal moment for China. The inclusion represents the recognition for China's expanding role in global trade and financial activities, and the important progress made in reforming the country's monetary, foreign exchange, and financial systems. The IMF's interaction and cooperation with China has helped addressing global imbalance quite significantly. Since the mid of last decade, the IMF has continued to call on China to address its external imbalance. Recognizing the risks of its internal and external imbalances and responding to external calls, the Chinese authorities have made important efforts in rebalancing its economy to rely more on domestic demand. China's current account surplus has declined substantially from its peak of around 10% of GDP in 2007 to about 1% of GDP in 2019. At the same time, the renminbi exchange rate has also become much more flexible, with official foreign exchange intervention reduced to a minimum and reserved only for addressing excessive market volatility. This year, up to now, the renminbi to US dollar exchange rate has fluctuated in a range between 7.2 and 6.5, reflecting an unprecedented scale of flexibility. In recent years, the IMF's analysis and policy recommendations on China's local government debt and off-budget fiscal activities have contributed to the country's management on its overall public sector's debt. China's contribution to the IMF and the stability of the international monetary system has also grown over time. China's contribution to the fund has increased in the form of quota and participation in NAB and the BBA, which represents new arrangement of borrowing and the bilateral borrowing arrangement. In addition, China signed a memorandum of understanding with the IMF in 2017 to provide a grant to support technical assistance and training to government officials from developing countries. 5 years ago, China launched the Belt and Road Initiative for infrastructure development in many partner countries, mainly developing countries. The IMF has included the BRI into its policy dialogue in its country surveillance. And China has also introduced its debt management framework based on the IMF's debt sustainability and assessment methodology. China's membership of the fund and other multilateral institutions has much broader implications beyond obtaining and providing financing. China has adopted international standards and codes on various policy fronts, including supervision of banking sector and the securities market, supervision of systematically important payment system, anti-corruption, anti-money laundering, and countering the financing of terrorism, etc. These efforts have been instrumental in promoting market-oriented reforms and strengthening the rules-based management in China's economy. The IMF also benefited from China's participation in formulating its policies and rules that has become more targeted and tailored to emerging market and developing countries. Now we are in 2020. Let me talk about the pandemic and the international monetary system going forward. This year, as the pandemic triggered the worst recession since the Great Depression, China stepped up its support for the IMF and its members, including contributing to the IMF's Catastrophe Containment and Relief Trust, CCRT, which provides grants for debt relief for the poorest and the most vulnerable countries hit by catastrophic natural disasters or public health disasters. China has actively participated in efforts to strengthen the IMF's lending capacity and toolkits such as Poverty Reduction and Growth Trust, and NAB and the BBA, as I mentioned before. Meanwhile, China has also participated in the G20's Debt Service Suspension Initiative, DSSI, to provide debt relief for the poorest countries. The pandemic is likely to be catalytic to many structural changes. As we emerge from the current crisis, one important question to consider is how the international monetary system will change in the post-pandemic era. China's integration with the IMF has shown that in spite of many differences and controversies sometimes, multilateralism can be effective and instrumental to promote mutual understanding, induce economic and institutional convergence, build up trust, and strengthen a rules-based international cooperation and integration. We cherish our predecessors' vision and moral courage in establishing a rules-based, fair, and even-handed multilateral institution. In my view, one key area that needs to be continuously monitored and addressed is the governance and the representativeness of the IMF. We must acknowledge that the IMF and its members have already made great efforts in this regard and achieved noticeable improvements in the past decades. We highly appreciate and are grateful to countries and people who provided their understanding and support to China's efforts to modernize and elevate its economy and integrate it to the global system. That said, to effectively execute its vital role in the international monetary system, greater vision is necessary to foresee that more could be done, although nobody will expect it could be any dramatic process. Not only China has shown its great progress in this economic development, but also more emerging market economies will make comparable progress in modernizing their economies and increase their shares in the medium and long term. The IMF needs to be prepared and strive to be more adaptive and inclusive. It is the shared responsibility of both developed, emerging, and developing countries to make contribution to build up a more trustful and more cooperative multilateral system. So, in conclusion, the overall impact of China's interactions with the International Monetary Fund over the years has been very positive. It is in the interest of both China and the other members of the fund to continue and further develop this valuable relationship. So I will stop here. Thank you, Mr. and Madam Chair.
Thank you very much. Thank you for that incredible tracing of the history of China's leadership at the IMF and in the international monetary system. For those of you who are in the audience, so to speak, if you look at the bottom right-hand corner of your Zoom, you can type in a short question for the executive director, and I will please introduce yourself as well. I'll read a few to the executive director and allow him to respond. I have a few already. Maybe we can do one or two rounds. The first one is from Yan Wang. Yan Wang is a former senior economist at the World Bank and now a non-resident fellow here at the GDP Center. And she asks, thank you for an excellent speech, she says. In March and April, there were large capital outflows from all emerging market and developing countries. And so they're currently in a liquidity crisis. The IMF should issue more special drawing rights to overcome this liquidity crisis. What is your opinion on that? And what was the reason for the US government to veto this policy option, she says. She also has a second question where she says, according to the G20, China is the largest contributor to the DSSI. In the new G20 meetings that come in November, do you expect any new actions from China for debt relief that will go beyond the DSSI? I also have a question from Luis Vieira from the Bretton Woods Project. He says, as you note, benefits of IMF technical support to the development of China's macroeconomic structures and policies. I would appreciate your thoughts on the degree to which China's central position in the global economy enabled it to adapt to the advice to local realities. Given IMF conditionalities remain highly contentious, to what extent would you contrast China's relative level of independence to that of countries in less favorable conditions? I think what he's asking there is China's response to many of these crises has been to be counter-cyclical, but many IMF programs are pro-cyclical. And what is your thoughts on that juxtaposition? We have another question by Emma Bergesser. Emma asks, given that the IMF 15th quarter review fell short, will China be looking to move up the timeline of the 16th review, as a number of countries did in their October ministerial statements? Or will China move to stick to the original completion date of 2023? And maybe just one more, and then I'll do another round. There's lots of questions here. Is China supportive of the IMF expanding its macro structural work on inequality, gender, and climate change, in particular in the context of ongoing comprehensive surveillance reviews? Why don't we hear your thoughts on some of these, and I'll do another round after that. Thank you.
Oh, thank you. I think these are all very interesting questions. So let me try to answer. I hope I take note accurately. The first issue is regarding the SDR issuance. I think it is a very good idea. Also very appropriate for the fund to issue SDR in a large amount to deal with the liquidity shortage, and also in many countries, especially low-income countries, the insolvency issue actually. In my impression, quite many IMF member countries, they support this allocation. I'm fully aware that the US position is at this stage very cautious to go to an agreement for the allocation of SDR. But I hope that in future, in the next stage, as the situation in many low-income countries continue to develop, the liquidity issue will gradually develop into more and more insolvency issue, and the necessity of the SDR issuance will become more and more apparent. So I hope in some stage these a consensus can be reached in the board of the directors in the fund. The second issue is regarding the DSSI. I think up to now the DSSI only covers debt extension by the end of this year, and it is very likely that this extension will be further extended by another half a year or 1 year. So it is quite possible, and China will be no doubt will participate actively in the formulation of this new extension. Regarding the conditionality, I think since China actually has not been a borrower from the fund for several decades, actually, so the conditionality from the IMF to China is not very binding compared with those borrowing countries. But still, IMF has provided many policy advice to China, and it has become very constructive and consequential, actually, as I mentioned in my speech. For many other borrowing countries, the conditionality of the IMF's program becomes more binding. Sometimes, in many cases, I think it makes sense from purely economics theoretical point of view, but it is very painful for the low-income countries. So our position in the board is that the conditionality is necessary, and at the same time, the conditionality should be growth friendly and growth oriented. So during the structural restructuring proposed by the fund, the country should also pay attention to maintain a favorable environment for long-term growth, so that the country's long-term capacity of growth can be maintained and strengthened in this process. Regarding the 16th General Review of Quotas, it is a great regret that the 15th review has not been accomplished successfully in time. And we can see that most of the member countries, not only the emerging market economy and the developing countries, but also many developed countries, they continue to support a timely conclusion of the 16th review by the 2023. So up to now, this objective has not been changed. And I hope this review can be accomplished in time. As the last question regarding the inequality and the gender equality issue, this issue has become increasingly become the attention focus, one of the focus of the IMF's policy discussion. And when it becomes macro-critical, I think the fund should integrate this kind of policy discussion into its multilateral and bilateral surveillance. So this is my brief response.
Thanks so much. We have some other questions. You know, there's 3 or 4 questions that are basically say the same thing, that after the global financial crisis over a decade ago now, the governor of the People's Bank of China called for a new Bretton Woods system closer to John Maynard Keynes' multilateral clearing union. Do you think there's a chance to push for such proposals again, given the severity of the crisis we're in today? That's one question. We have another one from Barry Herman, a professor at the New School for Social Research in New York. He says, in 2019, the IMF adopted a new policy to protect social spending in members. There is fear that policy will fall by the wayside in coming IMF programs in the fear of quick fiscal contraction. Might China help provide some leadership in the IMF board to implement the social spending protections? We have Scott Vaughn from the International Institute for Sustainable Development, who says, thank you for an excellent presentation. He says the IMF has underscored the links between macroeconomic stability and climate change in the recent World Economic Outlook. And do you see the IMF playing a role to link debt restructuring with climate change in some way? I have another question from Ye Min, a professor here at Boston University, who says, thank you for a great speech. She's long admired your work and remarks, and thanks so much for your talk today. She asked, can you help us understand 2 issues in China? 1, new regulation over internet financing, and 2, implementation of the new infrastructure planning. Many thanks. Maybe one more. Andrea Shalal from Reuters says, Carmen Reinhart at the World Bank has said that China is not accepting the idea that there will have to be debt cancellation for some highly indebted countries in the wake of the crisis. What is China's view on this? Is China bracing for some debt write-offs? Does China support expansion of debt relief efforts to include non-IDA countries, including perhaps a new instrument being discussed to aid small island states? I think that's a lot of questions. Maybe one more from Rick Roden from Global Financial Integrity asks, is China in favor of developing the Chiang Mai Initiative for Multilateralization into a full-fledged Asian monetary fund at some point in the future, which could act independently of the IMF? And if so, what would it take to realize this? Thanks so much.
Oh, so these are all very interesting and also sometimes difficult questions regarding the. Yeah, I remember during the global financial crisis, the governor of the Central Bank of China has written an article mentioning and the framework proposed by Professor Keynes, which is a very ideal framework, I think. So that idea has been inherited by people in the fund in 1960s, and that has helped the creation of SDR. So if the SDR can play a more important role, I think so eventually some shortfalls, some shortcoming of the existing international monetary system may be overcome to some extent. But this is a very ideal solution. So we hope the countries, member countries of the fund can think in this way, and they can recognize that many macroeconomic and financial problems that occurred in a cyclical nature can be overcome by reforming the existing international monetary system. So Keynes's approach or idea is one way to achieve that. But maybe that's a very, very long way to go. And regarding the social spending, we fully support the IMF's approach to emphasize the social spending, especially in the major structural adjustment of the low-income countries. Because to maintaining the stability of a country is very critical to ensure a successful implementation of the structural adjustment under any fund program. As regard to the recent introduction of the strengthened supervision on internet economy, I think this is a natural consequence of the development in the internet economy, because we can recognize that increasingly there is a problem of a natural monopoly, winner take all, and the issue of protection of private data and protection of the privacy of the consumers. So these newly introduced supervision is a simplified, more balanced approach from the supervisory authorities' perspective. Regarding the debt relief in the next stage, China, now we need to coordinate with the multilateral institutions or multilateral frameworks in moving forward. And in this process, we have already actively participated and made contribution. And actually, China's share in the bilateral official lendings is the largest. And we have already suspended our many bilateral lendings to developing countries. So in moving forward, we will continue to coordinate with all the other stakeholders, and not only bilateral official creditors, but also multilateral institutions and the private creditors. Because if you take a look at the great picture, you can see that approximately multilateral institutions account for 1/3 of the total credit to developing countries. and the private sector account another 1/3. So without the full participation of both multilateral lending institution and private creditors, the debt relief for developing countries cannot be very successful. And the leader of China has already expressed its signal that China will not only fully participate the multilateral debt relief initiative, but we also consider to provide more support to those countries which are in a more difficult position. Regarding the future development of the Qingmai initiative and the reserve pooling system, currently I think it is more a supplemental arrangement to the IMF-centered global financial safety net. It has not been fully mobilized and utilized up to now. So I hope in future it can play a more important role. But whether it can be evolved into a regional monetary fund, I think that is still a very, to me, it is quite a remote future. It also depends critically on how the IMF can function in the future. If it can function very well and provide a very effective role to safeguarding the global financial stability, so the necessity of developing some regional cooperation will not be so urgent. But if the fund actually itself failed to function well, so there will be some argument, a strong support for further develop the regional mechanism. And the mechanism in Europe is an example. Whether this will also spread to Asia, I think we will continue to watch closely, but also depend on whether the regional economic cooperation and financial cooperation can be further developed.
Thanks so much. We only have a few more minutes. I'll ask a couple. There's lots of questions. I'm sorry, everyone who's out there. We have close to 100 people who come to hear this great speech, and I'm not going to be able to field all of your questions. There's another group of them about things that you've written about with respect to China's central bank digital currency. What are some of the motivations for that digital currency? What would it impact SWIFT and other kinds of things such as monetary policy? That comes from Christine Jiang from New York University, and a number of other folks asked similar questions to that. James Sundquist, a PhD student at Yale University and a BUGCI fellow, asks, that he says that the US government and China have different views about debt sustainability in the Belt Road countries. How has the IMF worked to reconcile these opinions? And third one, it goes back to something that you said during your speech, which is that China's current account surplus has gone from 10% to now 1%. Given that the ambitious Belt Road Initiative is largely denominated in dollars, will the Belt Road face a dollar shortage to meet its ambitious infrastructure financing goals? And to what extent might the renminbi be a tool to continue that ambition? Why don't you answer those last few questions and then make any closing remarks that you might wish to make? Thanks so much.
Yeah, for the digital currency, I think the Chinese central bank, they have started the research on the digital currency quite a few years ago, which was quite early among central banks around the world. I think this is mainly based on the fact that the digital economy has developed very fast. And the digital payment has also developed very fast in China by the private companies like the Tencent WeChat payment system and also the Alipay system. So it is imperative for the central bank to make in-depth research and develop its own digital payment system. It is a system which is aimed at function as part of the M0 actually, not replace the cash partially, but not the M1 or M2. So it is a two-tiered system. And the impact, I think, will be, since I'm not an expert on digital currency, but I think that it is only a technical instrument. It will greatly facilitate the daily transaction and facilitates the transmission of the monetary policy to the grassroots. But it may not be a very fundamental change in the existing monetary system in China. As regard to the China's current account deficit shrinkage, I think I understand the problem is focused on the possible shortage of the US dollar. So the shortage of US dollar usually occur periodically. So that has created a lot of issue for not only China, but also many other emerging market economies. For smaller sized economy, so there is no choice but to follow and respond passively. But for a larger economy like China, which size is becoming similar to Euro area, I think the solution is to gradually try to reduce the currency mismatch in these international transactions, which is very costly for a large economy like China. So to encourage the wider use of domestic currency, renminbi, in our own international and financial transaction is an unavoidable trend. But China currently is still quite lagged behind compared to this development in its real economy and to its external relation, trade and financial relation with the rest of the world. So I think China will continue to open up its financial market to encourage wider use of renminbi to reduce the currency mismatch and the risks associated with this mismatch gradually. So that also means that in China's external investment and the external lending and borrowing, the renminbi can play a larger role. But that could only happen gradually.
Well, again, thanks so much for these incredible insights over Chinese leadership in the international monetary system and for engaging with this very large group of people who joined us today here from from Washington, from China, from Europe, from Boston. It's been great to engage with everybody here. I want to invite, before we all collectively thank Dr. Jin for these insightful remarks, I want to invite everyone to come back on Monday, where we'll feature the Honorable Mia Motley and the Honorable Gordon Brown for the launch of the large global proposal for a global debt relief effort. And we will have Yan Wang talk about Southern Africa's debt sustainability in the COVID era, among a number of other events that we'll be having over the course of the semester. Please help me in thanking Dr. Jin, Executive Director to the International Monetary Fund from China, for sharing some of his morning with us today from Washington, D.C., where he's safely working remotely. And want to just thank all of you and all of your directors at the IMF for the hard work you're doing, trying to put leadership and bold ideas to try to combat this crisis, protect the vulnerable, and mount a green and inclusive recovery. So thank you very much for your time today, and thank you for your efforts at the IMF board.
Thank you. Thank you.
Thanks everyone for coming.
So let's keep contact after the meeting.
Yeah, absolutely. Thanks so much for engaging on this and for participating. It was a great sweeping talk, and lots of interesting questions, and one of the most well attended events that we've had all year. We've done a number of these, and every one of them we'd be in trouble because our seminar room at BU only holds about 50 people, so we would have had to have turned maybe half today away. So it's been great to have all these people here, and thanks so much for your insightful remarks and for engaging with all the questions that were out there. And again, I really did mean thank you for your leadership and China's leadership on all these issues, and hopefully I see Maureen still has it on record, so I don't want to be controversial, but I hope that the Biden administration will come around and see some of these issues more the way China does at the IMF over the coming years. Maureen, please cut that out when you post the thing. Well, so have a wonderful day today.
Professor Gallagher, can I get a copy after the meeting? Can I get a copy of the questions and answers in today's discussion, and also the name of the participants of this meeting?
Maureen, are you still here?
Yes. Yes, we can do that.
Yeah. So before we turn it off, we should do that, and it would, if it is possible, to sort of snip off that last comment that I made. I don't want to inflame anything, but yeah. So you can send a list of the questions. The participants, we can send you the names, I guess. Unfortunately, when people register, they don't tell us their affiliation, but you might, but in the question and answer, most of them said, "Hi, my name is Minya. I'm a professor at Boston University." So you'll have most of them.
And the video is also available from the YouTube?
Yes, we'll send you a link to that too.
Okay. Interesting. Thank you.
Okay.
Very good.
Great. Thank you.
Okay, thank you very much.